Nebius stock is exploding right now, but here's the question investors can't stop asking. Is NBIS still a huge opportunity, or is this rally about to cool off hard? Because what's happening with Nebius right now is grabbing serious attention. The stock has been moving aggressively, breaking important levels, and suddenly becoming one of the hottest AI-related names investors are watching. But whenever a stock rises this fast, one important question always follows. What happens next? Can Nebius actually continue pushing higher and possibly reach the massive $200 level, or are investors getting way too excited too quickly? Let's talk about what's really happening. Nebius is benefiting from one of the biggest market trends in years: artificial intelligence infrastructure. Here's why that matters. AI companies need huge computing power to train models. That means expensive GPUs, giant cloud systems, powerful servers, and massive data centers. Without infrastructure, AI growth slows down. And that's exactly why companies connected to AI computing are suddenly seeing massive investor interest. Nebius is trying to position itself as a serious player in this space, and many investors believe the market is only beginning to understand how large this opportunity could become. That excitement is one reason the stock has moved so aggressively. But there's another side to this story that investors shouldn't ignore. Growth at this level costs serious money. To compete in AI infrastructure, companies need billions for expansion. We're talking about data centers, hardware, computing systems, and long-term infrastructure projects. That means Nebius will likely continue spending heavily to grow. And here's where risk enters the picture. Fast-growing companies often raise capital through debt or by issuing new shares. When new shares are issued, investors can experience dilution, which sometimes creates short-term pressure on stock prices. So while the long-term story may look exciting, short-term volatility is still very possible. Now let's answer the biggest question. Can Nebius stock hit $200? The answer is simple. Yes, it's possible. If AI demand continues growing rapidly and Nebius executes well, the company could absolutely justify much higher valuations over time. But short-term, things may not be smooth. After a huge rally, stocks often slow down. Sometimes they pull back. Sometimes investors take profits. And sometimes momentum fades before the next move higher. That's normal. Stocks rarely go straight up forever. Another thing worth watching is competition. Right now, everyone wants exposure to AI. New companies are entering the market. Others are suddenly repositioning themselves around artificial intelligence. But not every company will win. The biggest winners are usually businesses with strong execution, real infrastructure, and actual demand. That's one reason investors remain interested in Nebius despite the risks. At the end of the day, Nebius could become a major AI infrastructure success story. But it's still a high-risk, high-reward stock. The opportunity looks huge. The volatility is real. And expectations are rising quickly. If execution stays strong, the upside could be massive. But if growth slows, investors should also expect sharp pullbacks. So now the question is yours.